Bitcoin price predictions. Bitcoin had a rocky first half of the year, but experts still say it will eventually hit $100,000, and that it's more a matter of when, not if. From $10K to $28K in 2022 and beyond. Despite the volatility and recent slumping price, many experts still say Bitcoin is on its way to passing the $100,000 mark, though with varying opinions on exactly when that will happen. And a recent study by Deutsche Bank found that about a quarter of Bitcoin investors believe Bitcoin prices will be over $110,000 in 5 years. The volatility is nothing new and is a big reason experts say new crypto investors should be extremely cautious when allocating part of their portfolio to cryptocurrency. Bitcoin has shown as steady a rise in value over the years as any other cryptocurrency on the market. It's only reasonable for Bitcoin investors to be curious about how high it can ultimately go. Bitcoin price predictions for 2022, between $10,000 and $28,000. Bitcoin's price is extremely difficult to predict and even more susceptible to market factors than more established asset classes. But we decided to ask some experts for their best guesses for 2022 anyway. It's been a brutal first half of 2022 for crypto, as well as the stock market. Investors have turned away from risky assets in a time of a slowing economy, higher inflation, and rising interest rates. Given that Wall Street is in a bear market, and experts expect it to last for a few more months, Bitcoin could make its way back up to $28,000 by the end of the year, according to an analysis from Deutsche Bank. Meanwhile, a 53-expert panel reported by Finder expects Bitcoin's price to reach at least $25,000 by the end of 2022. But one expert isn't convinced Bitcoin has hit its lowest price of this year yet. Crypto market analyst Wendy O expects Bitcoin to drop as low as $10,000 since it has a history of correcting as much as 85% in past bear markets. The largest crypto hit an all-time high in November 2021 at roughly $68,000, so an 85% correction would lead it to around $10,000, says O. However, it's not going to be a straight shot down. According to O's technical analysis, Bitcoin has several resistance levels, so we'll likely see a volatile reversal upward before Bitcoin completely bottoms out this year. Bitcoin's price prediction highs and lows. The only thing guaranteed when it comes to crypto investing is volatility, so investors should expect more of it in the next few years. Nearly 1 year ago, Bitcoin's price swung as high as $68,000 and now it's back down below $25,000. This is how high or low Bitcoin's price could go in the next few years. What influences Bitcoin's price? Normal economic factors influence the price of cryptocurrency just like any other currency or investment. Supply and demand, public sentiment, the news cycle, market events, scarcity, and more. As a new and emerging asset, additional factors influence Bitcoin's value more than the average currency or security. Here are some. Scarcity. There are only 18 to 19 million Bitcoins currently in circulation, and minting will stop at 21 million. Industry experts consistently point to this built-in scarcity as a big part of cryptocurrency's appeal. Other experts point out Bitcoin has value because people give it value. That's really why everybody's buying, because of the psychological aspect, says Nelson Merchant, Johnson's Lightnode Media co-founder. That can make it difficult for the average consumer to discern whether Bitcoin and other cryptocurrencies are legitimate. The whole concept of supply and demand only works when people want something scarce, even if it previously didn't exist. Mainstream adoption. One of the main factors driving the price increase of Bitcoin is the rate at which new consumers are buying and exploring cryptocurrency, says Waltman. Crypto technology is being adopted at a faster rate than humans first adopted internet technology, she says. Assuming it continues, the compounding acceleration of new adoption could keep pushing the value of Bitcoin higher and higher. Bitcoin adoption has been increasing at an annual rate of 113%, according to data from the digital asset management firm CoinShares. If people warm up to Bitcoin at a comparable rate to that of the internet's early days, the report makes the case that there will be 1 billion users by 2024 and 4 billion users by 2030. Regulation. Federal officials have made it clear in recent months they are paying attention to crypto. Industry professionals have recently alluded to what crypto insiders perceive as hawkish federal regulation being one key driver for Bitcoin's lagging price. In a recent CoinDesk First Mover interview, Seth Gins, a coin fund managing partner, said the Fed moved to a hawkish position just as Omicron started to tick up in the U.S., which could have increased doubt in crypto as a viable asset, resulting in January's bearish sentiments. Kind of evolved over the last 5 years, says Ben Cruikshank, head of Flourish. Regulators can always change their mind. Mining cycles. Finally, another major influence on Bitcoin's price is a cycle known as halving. It's complicated and algorithmic in nature, but in essence halving is a step in the Bitcoin mining process that results in the reward for mining Bitcoin transactions getting cut in half. Halving influences the rate at which new coins enter circulation, which can impact the value of existing Bitcoin holdings. Historically, halvings have correlated with boom and bust cycles. Some experts try to predict these cycles down to the day after a halving event concludes. What investors need to know about Bitcoin price projections. As with any investment, financial planners and other experts advise against letting Bitcoin's price fluctuations lead you to emotional decision-making. Studies have shown investors who contribute regularly to passive index funds and ETFs perform better over time, thanks to a strategy called dollar cost averaging. That's part of why experts recommend not investing more than 5% of your overall portfolio in cryptocurrency, and never investing at the expense of saving for emergencies and paying down high-interest debt. The path to long-term wealth and saving for retirement is most often successful for people with diversified investments like low-cost index funds, with crypto making up a very small part. And even with crypto, experts say a set-it-and-forget-it approach makes sense. Passive investing is a very valid way to achieve financial goals, says Arkansas-based certified financial planner Sarah Catherine Gutierrez. I don't think people understand across the board how to value, says Gutierrez. When you're buying it, you need to know your expectation of what value you're going to get from what you're buying. Financial planners don't have a bias against cryptocurrency, Gutierrez says, particularly if a client expresses an interest in learning about it. However, you should ask yourself whether you need crypto as part of your plan. In most cases, says Gutierrez, the answer is no. Our take is that we don't think you need Bitcoin in order to reach financial goals, she says, adding that the average person should favor simple ways of investing that are easy to understand. This will keep you on track for core financial goals and better position you long-term for a healthy retirement. That's all for today's video. If you guys like the video, please subscribe to the channel and press the bell icon for latest video. Thanks for watching.